Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center. We are your go-to mortgage broker in the Durham region, and this is a weekly mortgage market update just to let you know what's going on in the mortgage market. So over the last week or so, we've noticed that some fixed rates, not all of them, but some have started to decrease. And some would say, well, why is that? Like, what has changed? Inflation is still not at 2%, and the Bank of Canada has not started to decrease rates yet. So why are some of the fixed rates decreasing for the first time in some time now? And there's different factors. So, the fixed rates are often impacted by bond yields, and the bond yields are impacted by what's happening with the economy. So a few factors or points to mention on the economy. Number one is that the GDP, which is like the temperature of the economy. When it's a negative GDP, it basically means that the economy is contracting versus expanding. So the expectation is that GDP this quarter will be negative, and it has been negative. So that's one factor. The other thing is that renewals are coming. So basically every month that goes by now, it brings a new cohort of people that are renewing at today's higher mortgage rates versus what they used to have. And so therefore there's a new cohort of people every month that have a more restrictive budget because of that. And that's without the Bank of Canada increasing rates any further. It's just naturally happening as the renewals kind of happen month after month. The other factor is unemployment. So the unemployment rate has been increasing since April, basically. It has not gone down. It has only gone up since April. Not every single month, but certainly many months the unemployment rate has increased since April of this year. The other factor is the expectation of inflation coming down. So most would expect that, many economists, that is, and rate analysts would expect that inflation should be coming down a decent amount over the next 6 months. And that's another factor that's kind of going into this idea of the markets expecting lower fixed rates, or in the end. Now, the other factor that's an interesting one is that some clients are now starting to ask us about doing a variable rate versus a 1 or a 2 year fixed rate. And 1 or 2 year fixed rates often are over 7%, whereas some variable rates are just over 6%. So there is perhaps a case that can be argued that for some people, in some cases, a variable rate might be an interesting option versus a 1 or a 2 year term. Obviously, it depends on the situation. Every client is different, and it depends on risk tolerance and other factors as well. That's something that we can certainly chat about if you have a mortgage renewal coming up, or a purchase that you want to do, or a refinance that you're looking at. Just feel free to reach out, and we'd be happy to help.